Hi, this is James Shug with Westpac London's end of day report for Tuesday, the 18th of December. Not quite end of day actually, it's only about 3:30 in the afternoon, but need to get this done a little bit earlier than usual. There's not too much to report today. We had a new 6-year high in the US's National Association of Home Builders Housing Market Index. That index has been rising quite sharply recently as buyer traffic increases, and in the last couple of months as present sales have risen, although future sales expectations did pull back a bit in the latest survey. Nevertheless, it's another indicator telling us that the US housing market seems to be slowly on the road to some sort of recovery. The US current account deficit narrowed in the third quarter, no real surprise given we'd already seen the monthly trade figures. The UK CPI held at 2.7% in November. It rose from 2.2 to 2.7 in October and held there last month. The October gain was due to higher university fees, which impacted at the start of the academic year. It held there in November mainly because of higher food and utility prices, gas bills. And we know that some of the gas companies increased their prices in November, others in December. So we're probably going to see further upward pressure from utilities and the CPI for the UK heading into the end of the year. There's no other data to report really. Ongoing focus on the fiscal cliff negotiations in the US seems to be the main factor, in fact, behind today's market gains. The London market, with about an hour or so to go of trading, is up 0.3%. The French market up 0.1%. The Germans are up 0.4%. There's a 1.3% gain in Spain and 0.7% rise in the Italian market. The Dow at the moment is up about 0.2%. That's at 13,264. In commodity markets today, not too much exciting happening. Copper prices are down 0.25%. So is gold down 0.25% at $1,694 an ounce, and oil's up 0.25% at $87.41 a barrel. The Aussie dollar is at 1.053 against the US dollar at the moment. It's been kind of slipping since the Reserve Bank released the minutes to their December meeting. Those minutes explained the thinking behind the rate cut. We've also had Reserve Bank Governor Stevens quoted in a Financial Review article, and certainly the release of that, at least initially, did see a little bit of further Aussie dollar selling, although it's picked up a bit since then. But nevertheless, down from where it was yesterday and 106 late last week. That's about it for today's report. I'll be back again, same time tomorrow, or maybe a bit later.